Now, the ECB are meeting on Thursday, December the 18th. And here's what to expect from historical volatility. If you look at SeasonX, you can see here looking at ECB meeting. When the ECB meet, on the day of the meeting and the day after the meeting, you can see on average there's a fall of negative 0.14%. Now, the Sharpe ratio is negative 2.08 and the standard deviation is 0.80%. So the ranges are relatively contained, and you can see upside surprises peak at about 1.5% and downside surprises peak at about 1.75%. You can just see by looking at this. Now, the expectations for this ECB meeting at the moment are as follows: that 75% chance that the ECB are going to be on hold, and 25% that they're going to cut. And you can see the short-term interest rate curve has just been reaching higher in the last week or so. So on balance, that would favour upside. So an upside surprise, an ECB who really start to signal the end of interest rate cuts, which the market's pretty much expecting now. You could see an upside of around maximum, if you got over 1%, that's what you could maximum expect. And if it's a downside surprise, so they cut interest rates by surprise, then you could look for a move about 1.5–1% lower, especially if they give a dovish surprise. But it's just helpful to use the ECB risk event feature, because you can get a sense of historical volatility, and looking at current market dynamics, you can set your maximum and minimum expectations depending on the surprise. So ECB rate decision, December the 18th, here's the historical volatility. And it's just also helpful to realize that on average, the euro dollar falls during an ECB meeting. Remember, don't just trade it, season exit.